what I would like to do here is just a review for the benefit of those that are joining the webinar right now in pretty much clarifying what it is that the VC PMI is telling us as we came into this week. The main thing that I want to review basically is that the VC PMI, whether you're trading the daily, the weekly, or the monthly levels, identifies a very, very definite, perfect structure, a Fibonacci structure of 5 levels. Within those 5 levels, it identifies the average price. And once we identify the average price, we can basically extrapolate the levels above of the extreme levels above the mean and the extreme levels below the mean. The Fibonacci structure gives us 2 levels above the mean. The cell 1 level is the relative implied volatility the relative implied volatility 1-to-1 factor to the mean, with a 90% probability that if the price reaches here and it activates a trigger, that the reversion will unfold back to the mean. From the cell 2 level, whether you're trading daily, weekly, or monthly, it is a 90% probability if the price reaches there and it activates the short trigger that it would revert back to the mean. What I want to point out to you here is that the red levels, whether you're trading the daily or the weekly, when the price is in those levels, basically, it identifies the area of distribution of supply. And the algorithm tells you that there is a very high probability if the price reaches those levels that you will find sellers. You will find supply come into the market. And the AI tells you once the price reaches that level, and if it closes below, it activates a bearish signal, a short trigger from cell 1. From cell 2, it's a 95% probability if the signal is confirmed. And that's basically the market, once again, reaching the pivot point the first time, using the 15-minute bar, would create an alert or a setup for you. On the close of the next 15-minute bar, it would activate the trigger point. Below, it's a short. Automatically, your stop is the level above, and your target is the level below. And the market, as you can see here, has reverted from that distribution of supply zone into the accumulation of supply or demand. And once that trigger, the algorithm, the artificial intelligence combined identifies the trigger, it's a buy signal, automatically your stop is the level below. And so here, for example, the signal came in at 65.90, my stop was 65, my target, my initial target was 80. I'm sorry, from 65, which was the weekly signal, the first target was 1479, 1480. As you can see here, that weekly signal was completed, and that was a approximately $15 per ounce gain which is equivalent in a futures contract to $1,500 gain. Where do we go from here? With a current price trading at 1481 and a half approximately, the market is trading above the weekly mean of 1479 and approximately trading around the daily mean of 1480. If we focus on the weekly signal here, a close about 1479 today activates a bullish trend momentum as we come into next week. And activates the weekly targets of 1494 to 1507. The sell one level of 1494, if accomplished and the target is activated, will give you a 90% probability signal that the price could revert back to the mean, back to 1480. If it doesn't produce that signal and activates that signal, and it closes about 1494, that is a weak buy signal with a 10% probability that the price will go up. Even though you have a 10% probability the price could go up, you want to wait for the highest probability to activate the signal. And in this case, from sell 2, if accomplished at 1507 and closes below 1507, would activate a short trigger with a 95% probability that the reversion should unfold back to the mean. We're following the same principle of the market coming down to this level on November the 12th into this area of 1446 in that vicinity, which was pretty close to the weekly signal of 1444. And we have reverted back from the area of accumulation of demand, activated the target, the mean target, the level above, meeting the targets, as you can see here, where we are trading now approximately around the mean, the daily and the weekly. I wanted to do this report, this special report in the segment, because what I wanted to point out to you is that not only have we reverted back from these levels of demand that the VC PMI identifies in blue, that give you a very high probability that if you buy down there, the market more likely will revert back up as it is doing. But the price has broken out of this descending channel resistance trend level that indicates that so far we have 3 closes above this level, indicating that potentially the low of 1446 is going to be the low for 2019. And this correction from the high of 1566 has been completed. So as we come into next week, keep in mind to have that 1494 to 1507 targets in that vicinity. If we get the targets met, take and book your profits and go neutral before you take another trade. Let the market come to you and guide you very specifically applying the VC PMI in trading the supply and demand levels of the market.